Welcome back, everybody. We are up to the next lesson, and this lesson is on tape reading. This is a little bit more of an advanced lesson for active traders, not so much somebody who is holding trades for weeks or months at a time, but it's absolutely something interesting to learn, absolutely something that will be of value to you either way, because you get a little bit of a better sense of actually watching the most current price action. We spend a lot of time in the class talking about charting. This is really discussing what goes on kind of under the hood that actually creates the chart. So basically we're going to get into understanding the urgency here, and urgency is what you actually see on the tape, you know, the old ticker tape, except now today it's done electronically. When you should be busy as an active trader, and how to develop a strategy to forecast the next immediate move based on what you're seeing occur on the ticker tape. Alright, so before we get started, we have the T3 live disclosures. You can pause that and read that at your own leisure. Alright, the goals for the tape reading chapter are going to be very, very simple and concise. I am going to do my best to give you an understanding of what you should be paying attention to in level 2. Now, for those of you who may not be sure what level 2 is, it's very, very simple. When you log into your E-Trade or your Schwab account, or even let's say Yahoo Finance, you generally see what's known as level 1. Level 1 is very simply the best bid and the best offer, and the aggregate of all of the shares at that price. So you might see $20 bid, which is the advertised price to buy, and maybe 5,000 shares listed at that price, and $20.05 on the offer, or sometimes known as the ask, and let's say 2,000 shares. You don't see how that 5,000 or 2,000 is built up. It could be 10 orders of 500 to get up to 5,000, etc. That's where you see it in level 2. It's actually who is quoting, meaning what route or what person, it could be an exchange, and how many shares they're aggregating that leads up to the one big aggregation that you see in level 1. So level 2, to put it in simple terms, it's the depth of all of the quotes advertising to buy or sell. Very, very simple. And time and sales is very simple as well. It's actually the trade. So if you buy 100 shares of something, that actually shows up on what's known as the tape. And time and sales is what the tape is known as. It actually shows the transactions. So if we go take a step back, level 2 is advertisements to buy or sell. Time and sales is the actual transaction. It's your register receipt if you own a business. All right, what we're also going to focus on is how do we look at, or what should we pay attention to in the bids and offers in relation to those trades that are occurring. We're going to give meaning to what happens in level 2. So level 2 are advertisements, time and sales are the trades. We're going to combine what's happening between those to come up with the probability of what should happen next. And more specifically, within all of the charting that we've done, we're going to put the trades in the context of what happens with where they happen on the charts, and then come up with an idea of what should happen next based on the most immediate price action. I know that's a lot, but you know what? That's why it's video. You can pause it and take as many notes as you want. Alright, so reading the most immediate price action. For those of you that have not done this, I want to make a very clear disclaimer to you. The charts will be first and foremost where you get your ideas from. The stuff that we're about to cover in reading the tape will be a tool or a tactic to help you build on the argument that you've already made. And it's kind of like the charts are the bigger map, and the time and sales level 2, that can help you fine-tune which street you want to turn down. Okay, so remember, it's more important you're on the right, you're heading north or south like you're supposed to, as opposed to which street you're going to turn down. Alright. Tape reading is not reading that little ticker on the bottom of CNBC. That's nothing more than reading the last quote. All right. Tape reading is the skill, and again I emphasize skill there, of reading price action, the prints which is time and sales, and the quotes, which is level 2, as I just explained, to determine what is the order flow right now. What's going on right now. A method of forecasting from what's taking place now to anticipate what is likely to happen next. And if I could just take a step back there. Forecasting and anticipating. Very, very important for you to understand. Everything you do, if I haven't done enough talking about it up till now, is building a case for probabilities. So forecasting and anticipating on this very shorter time frame can be it can be a little tricky until you get some screen time. The point that I want to get across to you here is this. You don't want to make a forecast until you believe the stock is in an area where something should happen. So in other words, you're looking for significant reference points on the chart will be your first level of developing your forecasting skill from reading the tape. And then next is you'll actually do it completely from the tape. And believe it or not, it can be done. It just takes some screen time. All right? So what are you looking for? We've already gone over accumulation and distribution on the chart. So what we're looking for now is we want to know, are they marking up or marking down their inventory? And the way you see that in level 2 and in time and sales is whether or not they're moving their prices up or down. Again, go back to thinking about if you owned a store. If you owned a store and there were a lot of buyers, you'd raise your prices, as you should. You're in it to make money. Don't worry about being greedy. I mean, you're opening a business to make money. And if nobody's in the store, what are you going to do? You're going to mark it down. And how do you see that in level 2? You actually lower your best offer. It's very, very simple. And you pay attention to that. And you make sure and you look to see if they're moving in an obvious direction. All right, next. Well, how do you know whether you should or shouldn't move those prices up or down? Well, you're going to look at your tape. You're going to look at your cash register receipt. How urgent are your customers? In the vernacular of trading, how urgent are other traders? You're going to see this in time and sales. Now, here's what you're going to be looking for specifically. The frequency and the price of the prints. So in other words, how frequent the prints are occurring and what price the prints are occurring. Very, very important. So I want to give you a little heads up here though. When you are trying to learn how to do this, when you're learning to try and read other traders' urgency, we can get into why somebody might be urgent in a little bit. Only pick one stock. Pick one active stock and make it a stock. Don't make it an ETF because a lot of ETFs are used to hedge. Pick a stock that you normally trade. Pick a stock, only one stock, and watch that stock for an hour, for 2 hours, for 3 hours, for 2, 3, 4, 5 days. Get a feel for how that stock trades. You'll definitely, if you're diligent, get a feel for whether or not institutions are marking up or marking down their inventory. All right, next. Now, here's the interesting thing that must be learned, and I wrote tape readers in here, but it's really trader. Traders don't care who or why a stock is moving. Just pay attention to whether they're marking up or marking down their inventory. Period. Get out of your head translating what the financial statements mean. Get out of your head translating what the news means. The tape will tell you. It will tell you what's going on. You just have to remove your opinion. It's one thing to have an idea, but you have to remove your opinion. All right, so what is the essence of learning how to read the tape? First and foremost is watching the size, how many shares traded, the price, whether they traded actively as a buy order or a sell order, and we'll talk about that in a second, and the frequency of the trades. I wrote prints in here. That's what traders, advanced traders call it. It's the prints. So the size of the transaction, the price the transaction occurred at, and the frequency of the print. So the more frequent, obviously a lot more traders are showing urgency. Urgency to buy or urgency to sell. So once you start to see these trades now you want to monitor for what happens to the bids and offers after you're monitoring the size, the price, and the frequency of the actual trades. What technically should happen. Now don't think technically like charts. Think technically if there's a lot of buying, what should happen? If there's a lot of active selling, what should happen? And then you take it to the next step. Observe where in price action the prints are happening on the chart. So if we take it a step back, remember what we said about accumulation, distribution, markup, markdown. We already gave you really solid clues of paying attention to volume, which is now what you're seeing, volume on the actual tape, and combining that volume for where it happens on the chart. So if you're in a consolidation and you're seeing a very light sporadic print on the tape, that's good for continuation of the move. If you're in a consolidation and you see very, very heavy printing after a significant move and price does not move, but there's a lot of action, it's probably accumulation or distribution. So now you're actually seeing how the car runs. Very interesting, right? All right, watching the size and frequency of the prints. Now we're going to get a little bit into what's actually happening there. Larger prints traded consistently at the ask shows an aggressive buyer. So let's actually talk about what that means for a second. We talked about at the beginning of this slide presentation here, this particular lesson. Bids are advertisements to buy, and ask is an advertisement to sell. So if you're seeing larger transactions at the ask, that means there is urgency to buy what somebody else is selling. So that means there's an aggressive buyer. Now let's take the opposite side of that. Larger prints trading consistently at the bid. The bids are advertisements to buy. Larger transactions at the bid is larger transactions of active selling. Shows there's an aggressive seller. All right, so what do you need to watch for while you're watching these prints? Very, very important. You must watch a stock for a while, as I just said before, to know it's a large print for that stock. For example, I said don't watch ETFs. I said that very, very purposefully. ETFs are very constantly used for hedging. So you want to be watching a stock for a couple of hours, for a couple of days, for a couple of weeks to understand what large activity is for that particular stock. One stock might have a 10,000 share print might be significant. For a different stock, 10,000 share print might mean nothing. Okay? All right, so consistent prints on the tape, consistent activity, consistent urgency display to us the stock is active enough to be trading. Think about this from just a common sense point of view. If there are consistent prints, there's a lot of activity. Other people are involved. Sporadic prints shows us not to get involved because there's nobody else trading it. Why would you trade a stock? Why would you actively trade a stock? Nobody else is trading. It doesn't make any sense. All right, if you're new to shorter term active trading, I highly recommend you listen to this particular slide, number 6, a couple of times to get the feel down for active and passive. It's very, very advanced technique, tactic, strategy, skill, whatever you want to call it, to understand the fact that you could buy on the bid and buy on the ask. You could sell at the bid and sell at the ask. So you got to remember that there's two different ways to buy and two different ways to sell. Urgency is what determines which one it is. All right, observing where the prints are trading when it's on the charts. Are large prints occurring at a breakout point? That's good, right? You get this big green candle with a lot of volume. That's fuel. That's starting a new move. Are large prints occurring after a parabolic fast move? We've discussed that before. It's capitulation. More often than not, a heavy volume move at the end of a move. Are small prints occurring during a pause? We just went over that. That's good news. Sporadic light volume pause is very good. Are prints large during a pause? This is not good news. That means it's either distribution or accumulation after a markup or after a markdown. All right, so what happens to the advertisements? What happens to the bids and offers after those prints? If a large print trades at the bid, that's active selling, and the bid and offer moves lower, that's bearish. Price is following the urgency from the traders, so the active traders are pushing the price down. If large prints trade at the bid and the inside market moves higher, so there's aggressive selling, but the price still moves higher, there's a buyer who is not aggressively buying yet. He's passively sitting on the bid, taking on the aggressive selling. This is a very advanced slide for you to pay attention to here as well. If large prints trade at the ask and the inside market moves higher, that's bullish. Price follows urgency. If large prints trade at the ask and the inside market moves lower, that's bearish. So in this particular case here, there's a seller who has not had the urgency yet to move the stock lower. As of right now, there's enough buyers for him to not need to do that, for him not to have to mark down his inventory yet. So again, very four specific strategies that take time to learn to anticipate the next move. All right, now we've spent a lot of time during the course on charting. As I said before, charts will always be where you get your ideas from. Tape reading techniques should be used at first a specific significant reference point on the chart, and then you go to the secondary tool or tactic to help forecast the next price action. When you get better or you start to master learning how to read the tape, and again, you will not do it reading ETFs, and you will do it by paying attention to one or two individual stocks, you will execute the timing of your entries and exits better. If you go back to slide one or two slides ago where we discussed price moving up or down based on the prints, you'll start to get a much better feel of what's going on the tape. All right, so reading the tape with a plan. How do you specifically take this into the market? When you're watching time and sales, you want to be watching it with a purpose. You want to be watching it not just to watch the pretty colors. You want to actually watch what's happening. You should not be watching every single print. That will drive you crazy. You're looking, again, I want to make this very clear to you. Are institutions marking up or marking down their bids and offers? That's what you want to pay attention to. You should train your eyes to watch for significant prints, and I have for that stock in italics here because every stock has a different size that would be significant. More often than not, a 100-share print will not move a liquid stock. You have to train your eyes for consistency and also for the bigger prints and then what happens after those prints. You're scanning or monitoring for when someone shows urgency of buying or selling of size for that stock, or when somebody steps in and there is buying or selling urgency, in other words, an active tape, but the price doesn't move. That shows an aggressive buyer or seller who has not decided to be aggressive and trade on the other side yet. So when large prints occur, identify its significance in relation to the charts. If it's starting a move, it's fueling the next leg up. If it's ending the move, that means it happened significant amount of time after a significant move, or a light volume pause would confirm that move. All right, a little bit of a bonus here for tape reading, and this is actually reading where the print goes off. Okay, reading where can help you with a good execution. If you look all the way to the right here in this tape of AMD, the letter D represents an ECN. The letter N represents the New York Stock Exchange. So you can see here the red prints are active selling. The green prints are active buying. So you can see here there's 4,300 and 2,000 shares that went off as an active buy, one on New York, one on Direct Edge ECN, for 6,300 shares. And all of those 100-share prints in active selling didn't even total those two small prints. So you see where you have to learn to aggregate all of them quickly in your head. Time and sales not only shows you the price, the size, and the side, but it also shows you where it was traded. So let me ask you something. If you were looking to sell this particular stock, you would sell it on the New York Stock Exchange where that 4,300 share print went off. There's more activity there. Okay? So if you're trying to advertise, you want to notice the consistent flow of prints occurring at a particular destination. As a direct access trader, and we teach this in the Active Trader program, you could route your order to that specific location for a quicker fill. So you can contact your software provider. There's many different symbols in time and sales, but the most popular are New York Stock Exchange, ARCA, NASDAQ, and the EDGX ECN. And actually, BATS is pretty popular right now as well. Okay, and this concludes the tape reading lesson. I would very highly recommend you go through this one nice and slow. There was a lot of really good golden nuggets in this one.